Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor, DBA True North Wealth Partners. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. True North Wealth Partners and Stratus Wealth Advisors do not make any guarantee or other promise as to the results that may be obtained from this. Investing involves risk, including loss of principal, and no strategy assures success or protects against loss. Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
Hey everybody, welcome to Vantage Point with True North Wealth Partners. I'm Andy Smith.
Eric Susi.
Tuesday, July, I should say, 26.
26.
Get ahead of myself. Episode Big 25.
25.
Big 25. Hard to believe.
Yeah, another 2 years.
Yeah.
1 month. It's going good. Plugging away. So hopefully everybody finds these useful. And I'll go ahead and just do a little plug out now, I guess.
Yeah.
Be sure you follow us. Go to our website, mytruenorthwp.com, mytruenorthwp.com, or our YouTube channel. You can look us up there, Vantage Point with True North Wealth Partners. Again, Vantage Point with True North Wealth Partners. And on the YouTube, there's a little red button. Hit the red subscribe button. So every time we produce these and push this out on a monthly basis, you will automatically be notified. So there's two ways to, be sure you don't miss an episode.
Yeah, excellent.
Good.
Yeah. How you been?
Yeah, all right. You know how it is. A little busy. I will say one thing. We finally went golfing, didn't we?
We did. Woo! It's been a while.
So, folks, not good. It's been a few years since I went, so he carried me. And Russ.
That was fun.
Russ was good, and Russ and Andy carried Eric and Eric. So the two Erics were carried by Russ and Andy. I'll leave it at that. But
that was fun.
But yeah, just to get out, and that was a good time. But yeah, thanks. How about you? Family good? Everyone?
Yeah, everybody's good. Getting ready for school.
Yeah. That's probably why you said August, because school's been on our mind too.
Yeah.
So
Yes, back to school stuff, and you know how it is.
Yep.
Life, right?
Yep. High school bills and college bills. What fun.
Yeah, kids don't get cheaper, do they?
Contrary.
That's right.
Good. Well, what do we have here? What's going on in the recovery tracker? And
crazy times still, right? In the stock market, and of course with the economy. But on the recovery tracker, the jobless claims, right? Slight uptick, unemployment, which is good.
That's a good thing. Yeah,
which
we need that to cool economy, among other things. But
retail sales still up.
Yeah.
Which is good. It's goes consumer, just highlighting a few of the things here, right? The consumer still, even though, definitely some confidence waning, I guess.
No question.
Still, coming in, somewhat strong. Box office receipts somewhat down, which is kind of surprising for the summer, but maybe it's just, I don't know. There haven't been a whole lot of movies that seem appealing, at least to me, I guess, that have come out recently. Restaurants, open table, up slightly. So it seems like people are going out a little bit more now, even still after COVID, and commercial flights, kind of a slight uptick, which is good.
Yeah.
TSA checkpoint data is up. Hotel occupancy is up. Rail car traffic is somewhat up as well. So all good things.
Yeah.
But you have inflation, right?
Right.
Still high gas prices.
Yes. Yeah. There's a lot packed in there, but, I think you and I were talking about earlier, even Tiro came out and said, the new buzzword now is, okay, inflation's there, probably has peaked now.
Sure.
So we believe that's probably the case. So as a new CPI numbers come out, it should be going a little lower. But the key word is now sticky. So it will be sticky. And even our Tiro price guy, he mentioned that well. So it'll be around for a while, well into next year, as far as the stickiness of all that. So maybe a shift also from the mindset of, okay, inflation to recession is really the talk.
Yeah,
so,
sure.
Okay, recession. So we'll just sort of talk about the elephant in the room. So, Brian Westbury from First Trust, technically, you have folks getting out there trying to front run, yelling, talking yesterday and all the news media. It's like, okay, trying to change the definition of a technical recession. So let's just go through that. So it is technically, 2 negative quarters in GDP. Well, first quarter was negative 1.6. So tomorrow, there'll be a CPI print or Thursday. I'm sorry. Yeah. Thursday will be a CPI print. So whether or not it's negative, we'll see.
Sure. That's just the first run.
That's the first run, right? There's multiple revisions of it.
Yeah.
So whether or not it is or not, but I think it's interesting how that they're trying to get out ahead of it all. They change the narrative and change definitions of things.
That's right.
So it's technicalities, whether it's a recession now or later this year or next year. The point is, it's going to be challenging, and more of the recessionary search terms are now popped up greater than inflation.
Sure.
So on Google search terms, there's a thing. So that's now surpassed inflation. It's now recession. 2 questions, like we've talked about. We've talked to our clients. You want to ask is how long and how deep. Mm-hmm. So we're all over that. How long, we'll see. How deep. I personally, and we've talked about, I don't think it's going to be that deep.
Yeah.
It's just okay. Really, how long will it be?
Sure.
Those are some of the calls we've been on and webinars from different, our research center folks that we utilize, strategic partners.
Yeah. Yeah, let's get it over with.
Yeah, I know.
This is tough. It's just great. It's
rips the Band-Aid off.
It's like the slow barge.
It is.
It's just been on side. That's crazy.
And you heard us talk earlier. You want the unemployment, to go up a little bit. So this money supply, the M2 money supply. Sounds like, the House passed the CHIP bill. Senate just passed it today about an hour ago. So looks like it's going to get passed. There's another 52 billion or whatever it is going to go.
Well, at least the government's tightening their belt, right?
Yeah, sure.
Everyone else
is. Yeah. Think you may have another. I hear you. So
the one entity that caused this whole mess is spending more, right? Everybody else is.
But what do we know?
Tightening.
We're just common folks, but we get it. It's just the government's out of control. So that's what happens. So it's sort of a compounding effect. So we're monitoring it all and continue to make tweaks to the portfolios like we have been. And
Yeah. So what's the look? So the Fed's talking about raising interest. So they've been raising interest rates, right? So there's a whole debate about that, about whether or not that even does anything, right? Because really it's the increase in money supply, right? So it's like you have too much money chasing too few goods. You have inflation. So so the strategy behind increasing rates is ultimately to slow the economy. That's
the strategy. And you do that by raising rates.
Yeah.
So Powell, yes, to answer your question, we predict another 75 basis points. That will be tomorrow on Wednesday. So by the time this gets distributed later this week, it already happened. But so we anticipate 75 basis points rate increase. We'll take a pause in August, resume in September. And they'll be raising again. September, October. I forget exactly. I don't want to misspeak there, but there is a few more rate increases, meetings that they'll have between now and the end of the year. And so 2 things that we've also mentioned is, when the Fed, when you see the, more blood in the streets and earnings, we're starting to see that the past 2 weeks. Earnings are starting finally, the analysts are starting to cut earnings. That's a biggie. You have to start cutting before and get more realistic, right size corporate earnings. And then in addition to that, when the Fed says, hey, we're going to pause, ding, 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 that more than likely will be the bottom. So that's why we've been saying the past few months, we're there. We're not quite there yet. The other foot hasn't quite landed. So, we've had this, a nice little 2-week reprieve. It won't last, folks, so sorry to burst your bubble. It's all normal. It's all part of the bottoming process. The semiconductors were up over 10% for this past week. That's because of the bill. Yeah. So everyone's front running. And how about Pelosi's husband? Man, we need to get him on our team. Front run everything.
Nothing to see here.
Wow. How you make those millions? Okay. Anyways, it's just disgraceful. 2 sets of rules that are out there, folks. But so we're getting there. Just going to be. It's called the chop bucket. The chop bucket. So that's when the VIX is between 20 and 30. That's what we're in. So the F bucket is when it's above 30. We'll get to that later on. Just right now, it's the chop bucket when the VIX is between 20 and 30. So back and forth. Markets go up, turn around, go down, and we're seeing this. We McDonald's had good earnings. Walmart blew, opposite, so not good. So it's all, a lot of big key earnings this week. So some good, some bad, but that's all part of the churn and bottoming process and things of that nature. So, and then just sort of onto that too, just things to keep in mind, a little different topic here, but, land. So land is big, and it's just interesting how, Bill Gates, he's the largest U.S. landowner in the United States. He has roughly 270,000 acres, 270,000 acres in the United States. Opening up his own meat, plants, veggie things.
Yeah, veggie,
plant-based. What's
vegan
stuff. Yeah, I get that, but there's more to it than that.
It's a lot of vegan.
Another one though is China. So this is all coming from Fox News and other outlets as well. But China, they've been trying to land grab in North Dakota, Montana, Texas, near air bases, near cell phone towers that are the United States military. So it's just interesting how they can intercept things, and that's been going on the past week on the Hill.
Sure,
we're talking about that for security reasons as well.
Yeah,
and then a client of mine. We spoke about this too, but I have a client of mine who is the largest dairy farmer in Ohio, and he was approached by China about China buying him out for technology, yada, 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 and, productability of the dairy farm and what he does. So I remember him telling me this, and it's all sort of connect the dots, and there's reasons why, it's all just interesting. But, all right.
Yeah.
Interesting times we're in. So,
how much land do we own in China?
Zero, because they don't allow it. The CCP, Communist China. So geopolitical risk. So, Ukraine, all the wars, we're talking about that, Iran, North Korea testing. So it's all gotten worse, not better. So that's still going to be with us.
Sure.
So, there's still plenty of, Ben Franklin T approach, the positives and negatives. You weigh it all out. There's now more negatives or headwinds versus tailwinds.
Yeah.
So,
if you're an investor, how do you navigate this?
This, how we do it basically is through alternatives. The commodities we've owned somewhat.
Standpoint.
We've used Standpoint and
merger arbitrage,
different things that we have used for our clients. And, cash. We all have cash on the sideline too. So don't be afraid to hold a little cash. It's about preserving, not trying to make money per se. It's preserving your assets during this time period.
Yeah, losing less.
Yeah. So
catch the rebound back.
We've all done that. We've done a good job this year. So we're very proud of that. And going back to our December podcast, we said the party's over, and it's over, folks. So we nailed that one. Great questions there. I guess maybe moving on to, earnings are released, second quarter earnings. So, another 3-4 weeks of that, get through that. The Fed's going to be raising rates. Maybe other things, tips of the month.
Yeah. Tips. Yeah. I think while I was reading, actually today I was reading on CNBC, they had that's not so much a tip, but maybe it is about savings rates and savings rates with looking at, because during COVID, right, there are people getting checks and the saving rates are going up, right? People are putting money away. Yes. However, now just recently, this is from CNBC this morning, the Americans' overall satisfaction with their financial condition now stands at a 12-month low.
Oof.
According to J.D. Power data, with those who classify themselves as financially unhealthy is as high as 64% of Americans classify themselves as financially unhealthy. And so just looking at we always talk about, right, having cash as part of your plan. Like you need, I always say 3, 6, 12 months, whatever you're comfortable with. But then I always do this 12 months. You're going to need your money within the next 12 months. Yes. Then don't invest it. Keep it safe.
Correct.
Right. So it's like
cash is king.
Yeah. So it's just, but people are like in a spot where if they lost their job or if something happened, they wouldn't be able to pay their bills.
Right.
So that's kind of where we're at. And then what do they use then to get them through? Right.
Right.
They go to credit cards. Or other.
Speaking of that, how has the credit card industry? I mean, people are racking up more debt, right?
Oh yeah. Visa's earnings come out. Well,
yes.
I think right now or today. So it's
So Capital One credit, which has more of the mid-tier FICO scores, But yeah, it's interesting. They're all, Hedgeye and the research firms that we use as well. They're all, it's gone up. So the bad credit, the defaults have started. The housing has slowed. Mm-hmm. We'll get into that at the end about the charts when I go through all the flip charts. But it's there. And the savings rate, personal savings rate, 50% of America, they don't have $500. So it's pretty sad. Yeah. So it's going to get a little dicier before it gets better. But
that's right.
A good point on that. And then in addition is, I guess, back to school. Yeah. So we talked about back to school at the beginning. So little tips of the month here. There are certain states, a couple dozen, or maybe 13 or so states that have sales tax holidays. So for Ohio, ours is August 5th through the 7th. So for folks who have kids for college, high school, whatever, grade school, go out shop for Ohio. It's August 5th through the 7th. And for Ohio, it is actually just two topics. It's clothing and it's school supplies. Other states could maybe pick up footwear and or computers. But for Ohio, again, it's clothing and school supplies. So be sure you'll save that 5.75% state of Ohio sales tax. Adds up, yep. So keep that in mind.
Can't buy new golf clubs.
Oh, yeah, I know. Speaking of that, I had to wrap my putter because I haven't used it in a while, so it was folding. So you remember that, Andy? The pro was nice enough to wrap it in electrical tape so it wouldn't all crumble.
I think your putter, you haven't used it so long, I think it melted to your bag.
It's been a few years. Oh, well, that was fun. Yeah. And what's going on with COLA, huh? Social Security? What's the latest on that?
Cost of living adjustment, which, as we know, it comes out every year. So they try to adjust the Social Security benefit to keep up with inflation. So right now it's about 10.5%. Yeah. Looking at for next year.
Sounds high, and you need it high to cover the cost. So
then they'll come in and raise Medicare Part B. Right? So it's like, thanks.
RX, drug supply.
So But as of right now, 10.5, which would be
highest since 1981.
Yeah,
so
that's so more to come on that. But looking good, I guess.
Yeah. No, I hear you on that. So let's see. I guess maybe going through layoffs. Talked about that. Earnings, definitions of things, housing. A couple things. One we use is that NDR, Ned Davis Research, and also Day Hagen. Just some of the funds and fund firms that we use. Just their signaling strength and signals of what to have in cash and 50%, things like that. So a couple of the funds that we utilize, they're still at the 50% mark in cash. So again, one of the equity funds is still 50% cash. They've launched an international fund, but their other one is their fixed income fund that we utilize as well, and that's currently at 26% cash. So it's just, again, they have indicators, they track multiple things through the use of NDR, Ned Davis Research too. So it's a team effort here, and there's no question about it. Anything else you want to maybe hit, or before we get into all the charts and wrapping things up?
No, that's about all I had.
Okay.
Yeah, sounds good. Yes.
Good. Well, folks, let's just you've been through the drill. We always like to go through the charts. It's visual. Hopefully you can get a lot out of this. And he will run these through, or Nathan, our producer. So thanks for all your good work and making this fun for our clients, tolerable to understand and to absorb. So here is the Vix Volatility Index. Remember I mentioned the CHOP bucket. So that's between 20 and 30 right now. As of yesterday, it's 23.4. The average is 18.5, going back to 2010. So, still plenty of market volatility. Pullbacks, the S&P 500. Typically, you have 5% pullbacks, at least average of 4.6 times a year, going back to 1980. Currently, we're at 7 pullbacks thus far in the S&P 500 of 5% or more. There'll be more of that to come. Yield curve, the 10-year minus 2-year spread, so it's inverted. So again, the inversion here is 0.19. It's actually gotten a little bit wider than 0.21, I believe, or so. So the point is it's inverted. It's the deepest since 2000. So the inversion of that is the deepest since 2000. So again, that's a precursor for a recessionary. And whether it's 9 months out, a year, or longer, the point is it is a precursor for recessionary. So the key is how deep and how long. Fed funds target rate, this is going to be updated tomorrow. So right now it's 1.5. Add another probably 75 bips to that. So you'll be at 2.25. So that leads to the short end of the yield curve getting more yield than the long end. That's the inversion we're talking about. So they're doing that purposefully to slow down the economy, which, probably no soft landing, but we'll go ahead.
No, because normally when you loan money, you're rewarded for how longer you go. Right now, it's the opposite.
It's the opposite. Yep.
So that's the inversion.
Yeah. And then also with the $9 trillion that the Fed, the money printing them too. So they're trying to let that run off. So now you can see the blue line is starting to curl and fade. So that's part of the letting the Fed balance sheet run off. And that's going to be expedited even more so over August, September, et cetera. So you'll start to see that number. The goal, from what I've heard and read, it's not going to go back to zero, but maybe cut down a couple, $1 trillion, maybe get it to $5 trillion. So that'll take time and years, but the point is they have to start somewhere, and they're starting now. A little late, but hey, is what it is. GDP minus 1.6. We'll see how the second quarter first version comes out. Could be flat or negative, but it is what it is. LEI, leading economic indicators. So you can see it's currently 1.4, spiked up. The shaded lines there are recessionary lines, but again, currently 1.4% on the year-over-year LEI, leading economic indicators. When it goes negative, then therefore that's how technically you're in a recession as well for leading economic indicators. Jobless claims, you can see that ticking up. It's hard to see on the graph at the very bottom. You'll see it curl up. So, and it's more and more. We're seeing jobless claims left and right, and another round of job cuts coming from another large bank here in Columbus coming later. Yeah. So I think they had 2 or 3. There'll be more coming. So, this is a Michigan consumer sentiment. This is the sentiment of people, their optimism about the current economic conditions. So that's the average is 85.7. Current is 57. So it's the lowest, in decades, as you can see, folks. So not a lot of optimistic feelings out there. So among other things, CPI, we talked about that, 9.1 print. Hopefully that is the high print, and it should start to see peak. Gas prices have come down, thank God. Lumber's come down, all the soft commodities, soybeans, canola oil, things of that nature, hard and soft. So the vast majority have peaked over the past month and are coming down. So that's a good sign. So you have to go through that to get to the other side. Building permits to housing, again, that's starting to slow down. And that information also came out too. I believe it was down, just came out today from First Trust, down 8.1%. This is the June new single-family home sales, down 8.1% for the month of June. Year over year, it's down 17.4%. Again, it's coming from First Trust, just released here today. So, the party's over, so you have to let things, deflate and then come back down, and that's what we're showing here in the building permits. Yeah. Existing home sales, straight down. Okay, it is what it is. Sales are slowing. Andy and I have spoken, Columbus, greater Columbus, we're in a bubble, so we're very blessed. And as far as the housing market, it's very unique. But overall, you have to look at the whole nation as a general. The oil and dollar. So the oil, you can see it's inverted, different axis on the left axis. So the oil, it ran up to, close to 120. Currently, oil is roughly, let's call it almost $100 a barrel. But it's going to be in a trading range. And so that's that. The dollar, we mentioned, I think, last episode, to watch the dollar took off. So it went from 94 to 108, I believe, and right now it's about 106.48. Again, it's through July 25th pricing. So a strong dollar. So it's a flight to safety. All the European countries, and again, they're worse off than us. So that's why we have decreased our international exposure. For that reason. But my point is, they have it worse off than we do. As far as recessionary. And the LEI leading indicators, again, just talks about the 2-year, 10-year spread, how it's inverted, minus 0.19, and then the LEI leading indicator. So it's just 2 graphs on one page just to show you that. Then the bull bear market cycle, and a little update. We talked about this last month too. But the good news, like you mentioned, there's more bulls in the duration than bears, but we are definitely in a pullback. So it's just how deep and how long. That's where we're at there.
And another bull market starts.
And another one starts. So there is hope.
Double time.
3 months away from November, so let's get out there, folks. Do it. Have fun. Enjoy the summer. I know there's a lot of charts out there, but we appreciate you. Yep. Please reach out to us. Any questions, concerns? I know you've seen a lot of activity over your accounts the past few months, and we will continue to modify and tweak things as necessary. But enjoy the last month or so before school starts for all of them, and again, thank you for your consideration.
Yep.
Take care.
Have a great day. Thank you.
Enjoy.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Special thanks to our producer Nathan, as we will be producing these episodes on a monthly basis. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor, DBA True North Wealth Partners. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. True North Wealth Partners and Stratus Wealth Advisors do not make any guarantee or other promise as to the results that may be obtained from this. Investing involves risk, including loss of principal, and no strategy assures success or protects against loss.